buying, strong to the buying or to selling, at the bid or to the offer. I don't want to say buying and selling, but is the strength here at the bid or is the strength in the offer? Here's where the majority of the volume is, or is it neutral? So it helps you understand what's critically important, which is, and I know DB has talked about this a lot, where is volume coming into the market and what kind of volume, what's it doing to the market? And not just buy volume, sell volume. Volume that's coming in at the bid, strong. Volume that's coming in at the offer, strong. The volume cluster analysis gives you additional information relative to where volume is coming in. And that will help you get confluence with the volume profile chart. And then the last one is momentum analysis. If you're expecting buyers and sellers based on what you're looking at to get aggressive and stay strong, get momentum in a specific area, the momentum analysis helps you confirm that without having to go through the print and say, okay, strong, strong, that was weak, strong, that was weak, okay, okay. It allows you to do that visually. And again, with trading, there is so much information that you as a trader have to take in and interpret, and you can only do so much. Being able to go to the different colors, and I would tell you to be able to customize your colors so that they're meaningful for you, so that you don't have to think, you can just react to them, is it. I really don't have the words to tell you how important that is and how amazing it is to me, because it takes away further analysis that I have to do in reading the print, and when that's taken away, it helps me become more objective. It's like anything else, you know, if you go into a test at school or you go into a work job, a function, and you don't know what you're doing and they're throwing a lot of different things at you, you can become overwhelmed very quickly. Well, that's really never more true than in trading. And by the way, your own money is on the line. As a human being, again, your ability to think objectively, to look at data and interpret objectively, significantly decreases. So being able to adjust the colors, being able to have those two tools are critically important. And we're going to go through specifically how to use those. Not just in a structure chart, which is very important, but also in a profile chart, and compare that to the volume profile. Now, as a point-in-time activity, we use the order flow to determine if market participants' activity supports a specific trade entry and how to scale if we're going to scale, or where our stop is going to be. So what that means is, moment of truth comes, your indicator fires, you're at a level you want to make a trade for whatever reason it might be, and you are, moment of truth, making decisions, push the button. The order flow is going to tell you whether or not to push that button. You've done the homework, you found the level, the order flow tells you, yep, you're looking to go long, the order flow tells you, yep, sellers are losing interest here, they're becoming weak, I start seeing strength back at the offers, buyers are starting to step in, I get into the trade. Does that mean the trade's going to work? No. That's when we use a point in time or reading order flow to manage our trades. Manage our trades. But what I can tell you is that it's kind of like the old saying that, you know, in golf where 100% of short putts don't go in the hole. I can tell you that 100%, well, maybe not 100%, but a high percentage of trades that aren't taken due to hesitation will lose. Because inevitably, because of the probe and rotation, price may work a couple of ticks. If you get in late to a trade, you found your level, it comes down, you go, you're in a point and a half away from where the level was, maybe 2 points, and you know, I could have already taken a scale here if I wanted to, but I'm getting in here, now it's moving against me. Where's it going to go? I really don't want to take a 2-point stop or more. Use the print to get into the trade. If you've done your homework and you've gained your context, then you have to let the print be your truth. There is no other truth that you have available to you. Everything else is just ambiguous and uncertainty. It's the only thing that you have. And it's the only thing that will help you from a psychological standpoint gain control and manage your trade objectively. I really cannot stress this enough. All right. Volume cluster analysis, again, momentum analysis. Let's take a look at both of these in a live chart. All right, we're going to go back over to our handy dandy friendly ES and take a look at what we have. I've already done a little bit of this where I've talked about using order flow as a process, right? And what did I show you early on? Here's the volume profile, and we had weakness at the offer up at the top, weakness at the bid. We had what I would call a nice finish to both sides. We had a very good distribution of price movement, and as we get into volume profile, you'll understand what that means. Very, very good distribution, which suggested a balanced market. And so our trade was either at the edges, trading towards the middle, or waiting for what? A breakout of these edges, and for confirmation in the print that buyers or sellers were moving to a specific level. So as we looked at our print, and we're looking at the process, what starts to change back down here, and here is our level. We can see strength coming back, and there's no shame in this. We see strength start coming back into the print at the bid. We don't have any momentum bars yet showing us to the downside. And if you went short here, let's say you're going to take a breakout, you see a lot of strength coming back in at the bid, just below that low, and now we're starting to get a profile breakout as well. There's a good potential you're going to get stopped out in that trade. You shouldn't take this trade too far. But what you're going to see right here at 2050, if you're watching the print in the next bar, is it's going to go against you a little bit. You're going to see weakness in the bid, strength at the offer. And once you learn to use this, that is immediately going to tell you, forget about what likely is going to happen in the trade. This is immediately going to signal to you that your trade is at risk. Strength coming back into the offer, your trade is at risk. May have been just a stop run, but you're at risk this time. And it goes up. What do you see? I got weakness with buyers. Weakness, and more importantly, looking at the print, my volume point of control is at 23. I think at the time it was at 2350. So what am I looking at? And we're going to go through this again. What am I looking up at 2350? I'm looking for buyers to try to push this higher. What do I see in the print? Weakness, neutral auction, selling cluster, neutral. There's no strength to the upside. No strength at the bid. Where's my trade? So, and what you'll learn as we go through, especially tomorrow, is that if buyers aren't willing to take price effectively, and I believe at the time volume point of control was up at 2350, if this is no longer fair price for buyers, then buyers will need to find a different fair price. And if they want to make money and they've kind of given up ship here, they know they're not going to make money here, then the probability is that they're going to find a different place to get long. They're going to find a different place to try, and that's going to be lower. So the likelihood is the next time through this level, we're likely to see further movement to the downside. And remember, price will move in a specific direction until the other side steps in to shut that movement off. Buyers stepped in, they shut the movement off, but they had nothing. Nothing. How effective? This is the other part of the question. How effective are buyers being? Not effective at all. And again, I believe VPOC was up here at 2350. If they're not effective up here, and they were here, right, they were able to step in, the likelihood is that they're going to find another fair price. And that's not going to be up here. It's likely not going to be here because more than likely they want to make more. So we'll see them try to find a different price. And like I said, 1918 was the one of the things we're gonna talk about later in the day is opening swings and closing swings. And the closing swing low for Friday was right here at 18. And then we have a low volume area right at about 17.25, right where this red line is. So anyway, in reading this as a problem, I can see that buyers have kind of not given up, but they certainly have not proven that they have interest back above this level yet. And in order for me to take any long, now all of a sudden certain conditions have to apply. They've kind of stepped in, but I don't see any conviction. I don't see the conviction necessary for me to take a long. So what it starts doing for me is enabling me to build. We're going to go through this. All of this is going to culminate in building if-then scenarios. If price does this, then this is my trade. If price does this, then this is my trade. So it helps me to identify specific strategies now, and not just areas of opportunity, but trade opportunities and what my strategy is if that actually occurs, if my if-then scenario actually occurs. And so again, as I'm reading the print, I'm reading weakness at the bid now, weakness here, and even though we have weakness at the bid, what I'm not seeing, and this is the other thing that helps me as I look at the auction as a process, is each one of these bars, and every time price goes between 1920 and 1975, you will see that there is a different relative strength and weakness in this set of bid and offer than here. Right? It's different here in this bar between 1975 and 1950 than it is here. Right? This shows relative neutrality. So what I'm also doing as a process, and this can just take a little bit of time sometimes, is to understand that the last time up here, we had activity at the offer and at the bid, somewhat neutral, but we had a little bit more selling step in, and then buyers held. So we have, as I read this as a process, I've got a level, beyond these buying clusters right here into this neutral area that I would look for sellers to start stepping into. Excuse me. But I don't see any continued strength to the downside at the bid. So what this is telling me is we have a little bit of a balance area happening between this 2050 down to closing swing low from Friday at 18. So this has been I had this drawn from Friday. This is a key level as well as this closing swing high at 21.25. And so what I would look for, and my mind is this, I also have a low volume area at 17.25, which I believe had some relative importance from Friday. 17 to 17.25. So I'm looking for additional weakness to come back into the offer down here, and what I actually might experience is a stop run down through here. I don't have a short potential until or unless price moves through this 17 area with momentum, and I see conviction. And then what we're going to learn is how to use the volume profile chart to say this has further extension and what the most likely area for price to go. So I would tell you that if it breaks through this level, we'd be looking for 1575 and possibly all the way down to the low of Friday, which was 1910.25. Not only is it looking heavy here in the print, but the volume profile would suggest that this has got lower to go. But I have a level here that's a key level where I would where I would expect to see buyers step in here at 17.25. So what I'm able to do between the volume profile and the print relative to reading this, right? Because it came lower. As I'm reading the print as a process, even though price started moving back up, there was nothing in the print that suggested buyers were going to take this higher. And because of my guiding principle that says price will continue to move in a specific direction until the other side steps in to shut that movement off, what I'm looking for is, in my using volume profile, is where is the most likely place for buyers to come in and shut that movement off. And as I look at the volume profile, that place is down here between 17, 17.25. If it comes through here, right, if it comes through this level, and I'd give it maybe a little bit of room here, but if it comes through this level with significance, momentum, and I can read in the volume profile that, and it isn't finished to the downside, that this is likely extending, then I have a short opportunity on a pullback if it will pull back to 17, 16.75. And this is, there it goes, 14.75. I think I said 15.75, and then this has potential all the way back down to 10.25. But what I want to look for now, my next trade, just in reading this, I see weakness at the bid, little strength at the offer. I'm looking for this to pull back up towards 17, for the offer to go weak, for strength to come back into the bid for potential short, possibly back down into Friday's low, which is marked down here. So by combining the print and reading the print as a process with this is the other thing I love about the volume profile, it is so visual. Just looking at the structure of the volume profile, all of this activity is what I would call very weak structure in the market. So I would be looking for a pullback up back to this area, 17.25. And if there's continued strength at the offer, I wouldn't make a trade. But if the strength comes back in at the bid, weakness at the offer, that's where I would start looking for executing on a trade, sell market, and look for a potential of 10 or lower. Now the other scenario is that if there's strength back into the offer up here, I don't have a trade. The print would tell me not to make a trade, and I would look for buyers, because this is still a key level for me. I would look for buyers to push back through with some significant volume and momentum, and then look for a long on the other side of this and look to take this higher and actually back up towards 32, 32.50, which never really finished in my estimation from Friday. So we've got a little bit of a test further down. Again, the 17 area is where I'd look for 17 to 17.25, look for a trade short. And this is the other thing I love about this, using this system and trading like this, is I can go short at 17 if I would get filled there, put a limit order in at 17, and I literally can put my stop at 3 ticks. And what I'd be looking for is, if sellers are successful at holding the buyers, I would be looking for price to move back down, and possibly all the way back down to 19.10. So when price came back down to this 15.50, 15.75, I would be looking for more strength back into the offer. If I got into this trade at 17, they hold, it starts coming down, price starts moving back, and I see strength coming in at the offer at 17, 17.25, I can simply get out of that trade with a very small stop, maybe 17.50, 17.75. And it doesn't matter to me on this trade, because one thing I see is weakness at the bottom of these rotations. So again, what I would need to see in a trade short is strength back down at the offer, or the bid rather. It's 15.75 and 15.50. And if I had that, that would give me additional confirmation and I would start looking for price to come through 1475, possibly back down towards 1225 and possibly further. And all I'm doing is using the volume profile to help me identify those areas. And then I use the print at a specific point to help me identify the trade location and whether or not the trade is working. So again, the short was back here, 17 quarter. And what I would be looking for is I'm looking for strength to come back in the bid where it was weak before. I'm looking for this to change. And we've got weakness, a little bit of relative weakness, so I'd be watching this auction. If this is all it's got into it and price starts coming back up and I see strength at the bid or at the offer at 17, I don't need to think about managing that trade. I would rather take a break-even trade or a one-tick loss than to see a significant amount of buyers push this thing up, even if I only had a 3-tick stop, and take me out. Because my trade is working so far. I got more strength coming back into the bid. This is great. Now all I have to do is determine where my first scale opportunity is, and we're going to go through that in trade management. But again, the point in all of this is as we look at the bid and offer, and we read it as a process and point in time trade management, trade entry opportunity, we have the ability to trade with the buyers and sellers. We have the ability to find those locations where there's a high probability for buyers to step in, sellers to step in. Once the print continues to confirm, then using volume profile based on what recent area of interest are with buyers and sellers, we have a pretty good understanding. Nothing is absolute, nothing is certain. But we have a pretty good understanding of where price is most likely to go. And if the print continues to confirm that it's moving in that direction, we can hold that trade to just in front of that first potential target test area. Okay, let's see, a couple more questions. What is the red dash line? Oh yeah, DB answered that. That's the low of the day. I have one indicator that is that marks the 24-hour open, then the high and the low of the day. Do I use previous day value area as possible entry exit setups? That's a good question, Jim. I look at previous day's value area, and this is, we're going to get into this a little bit later in the day. So one of the things that I've come to learn as a student of the auction is order flow incredibly important. Incredibly important. It is the lifeblood of the auction. It is the representation, what is actually happening in the auction. But as I've come to understand the auction, and I understand intrinsically the guiding principles, the fundamentals of the auction, I know that the market moves from balance to imbalance. I know that it will continue to probe higher, probe lower, move up, move down, and get in balance. I know those things instinctively. So what I am always doing is identifying areas that tell me where buyer, seller sentiment or strength or weakness is, and then I'm looking for the print activity by buyers and sellers to show me that there is actually weakness or strength there, to confirm it, if you will. If a value area, so I'll look at a previous day's value area, and I'll look at the activity in that value area relative to the current auction, and I'll make a determination whether there's relevance. So for example, if let me pull this over and see if I can get to I can do this. I can do anything. So let me show you this. Don't ask me about this setting because we're going to get into it. This is a series of volume profiles that only represent the RTH session for the ES. Okay, they only represent RTH sessions for the ES. In this scenario, I don't care at all about the overnight or pre-market volume or activity. I just care about the RTH session. So what I can see from Friday is I have a value area. This is my value area. You can all see this, right? On this left side of the screen? Okay, because I want to make sure I answer this question. So I can see this value area, and what you can see from today is a move back up as a high to, is that 2550, I believe? Yeah, 2550. 2550. The value area high from Friday is 27. So when I look at VPOC for the day, I can see for the most part, price is rotating in value from Friday. Current value of the day, let me open this up a little bit more. This is kind of scrunched.